all for coming so much. This is our first GRID meeting for GRID Potomac, and we appreciate everyone coming, taking the time out to come and learn with us. This is going to be like an open conversation, so as Nayia is speaking, if you want to ask questions, please feel free to just raise your hand and ask as we go. And no question is a bad question, because we're all learning here together, right? So what GRID is a national network of investors. There's over 17,000 members of GRID, and I think there's like 40 or 50 chapters. I'm not sure. There's a lot of chapters. It's all nationwide. And GRID is an acronym. G stands for Grow Your Database. R stands for Relationships Transform Lives. I is Invest in People and Assets. And D is Develop Leaders and Build Wealth. So our goal as GRID leaders is to give knowledge and to share as much as we can, because we're also learning at the same time. But as we're growing and learning, we want everyone else to grow and learn. And when you have deals or need help, we want to be a resource for you guys. So we're always open. You can call us, text us, message us. If we don't know the answer, we'll find someone who can help you with that. So yeah, we are not gurus. We're all learning together. Again, our mission is to connect, learn from, collaborate with like-minded people interested in building wealth and creating impact in real estate, which is what I just said. So there's people here that are lifelong investors. There's people here who have never invested in their life. There's people here who are in the middle. We welcome everyone. This isn't closed to just different one level. Everyone's welcome. So if you have any friends, family, anyone who wants to get started or wants to learn, please invite anyone. It's open. You meet. Well, we'll get to that. So me, Tim, and Zach are the GRID leaders for GRID Potomac. Go ahead. You can do your.
Okay, so as Patrick mentioned, I'm Zach Wessolleck. I am one of your community leaders here at GRID Potomac, and I co-own Procapitalist Properties. With Patrick, we are real estate agents as well as investors in the area, and my mission with GRID is to help all of you start your investing journeys or expand on your investing journeys to grow your wealth or expand your knowledge, whatever your real estate investing goals are. I want to help you reach those goals.
I'm Tim Dineen. My first job was with the Prince William Cannons, so I just wanted to share that I am Woodbridge through and through. And I'm a mortgage lender by trade, been in the business about 10 years, invested in many different aspects of it, but super excited to learn more and help you guys at the same time. And I'm just so excited to see everyone here from many different walks of my life and Patrick and Zach. So we're happy to have you.
So my name is Patrick. Me and Zach own Procapitalist Properties. We're real estate agents. We focus on the investing side as agents, because a lot of agents just help you buy and sell, whereas we focus on helping you buy and sell, but also how can you buy and then use that as leverage to then gain generational wealth, right? You don't just have to buy a house and sell it and that's it. You can use your house as leverage to do more things with it. We own investment. We have 11 properties. We do flips. We've done somewhat of a subject to earlier this year. We did 2 of them.
You'll learn the right way to do it.
We'll find out if we did it the right way or not. But again, our goal is just to share and help you guys grow, and hopefully we can all grow together.
Good. Hi, everyone. My name is Nayia Pierrakos. I'm an investor. I was an agent for 12 years. I've been in real estate over 20 years. I have been flipping houses. In the last 10 years, I've been doing creative deals. That's why I'm here to talk to you about it today. Buying houses subject to the existing loans, seller financing, we'll touch all of that. And I'm also a coach and mentor to real estate investors all over the country. And I've been doing that since 2015. So I'm super excited to be here. Feel free to ask me any questions. I have some fun stories that we can talk about too. So good, the bad, the ugly. We got it covered.
So we've introduced ourselves, and part of what GRID is we're a community. So we're going to go one by one, and everyone's going to have 30 seconds to tell us who you are you currently investing, and what are you hoping to learn?
We'll start with Ryan.
Okay, Ryan.
My name is Ryan Pulis. I am currently an investor. I currently own long-term buy and hold properties. I actually hoping to get more into syndicated deals for that role. And what I'm hoping to learn from the group is how you guys became gurus at your project.
And this is also a time when everyone's sharing. If you have something you want to talk to someone about, or someone may need have something you need, write it down, and you guys can network after we're all done.
My name is Shannon. I'm not currently an investor. I'm very new into this, and I just am here to learn more.
All right.
Welcome.
Thank you.
Welcome.
Well,
My name is Gabby Moore. I'm a local real estate agent, born and raised in Woodbridge, but servicing all of Northern Virginia. My team that's here with me is the Novus Group, and we do a lot of investing. I myself have not done any investing as of yet, except in my own property. So would like to learn more and just kind of dabble into it, see what it has on.
Cool. Everyone, I'm Leo Sanchez. So I currently just bought my first property, using the VA loan, so open a house like that.
congratulations.
Thank you.
Yeah.
Separate properties in. I'd like to do multifamily access, what I'm interested in. What I'm hoping to learn from the group again, we are all local agents here. We all work with the Novus Group, part of EXP, and yeah, just hoping to learn and grow with people, and hopefully I can help somebody as well. Yeah. Perfect.
My name is Sarah. My two teammates already took all the good lines, but I'm not currently an investor, but hoping to learn more. I am definitely interested in the multifamily and other commercial properties as well too, and then hoping to learn anything that all of you guys have to share and just soak it up like a sponge.
Great. Thank you.
My name is Philip Simon. I am currently an investor. I've got some long-term holds, some flips, wholesale deals. I'm interested in short-term rentals. Just learning a little bit more about that and maybe what that would look like there.
Charlie.
Hey. All right. My name is Charlie Heinzman. I've been investing for a while. Actually, on what's called the EXP iBuyer platform under Clear Sky Properties. Hard money lender, fixed flip houses, rental portfolio, and tax lien certificate investing. I've been around a minute.
Charlie's a great resource.
My name is Greg Woodbridge. Actually a real estate attorney, and I work at Echo Title. I'm a partner over there at the Arlington office. So if you guys need to close your deals, close them with me. But I am also an investor. I invest mostly in commercial, multifamily, mostly passive. Oh, I'd like to actually get more active, kind of like feel like a renovation, and actually get more hands-on with the deals. And I'm hoping to learn how to do that with these awesome guys here.
And Echo and Frank actually sponsor all the food too.
Oh yeah.
So, thank you for that.
Good evening. My name is Kean Wright. I am not currently an investor, but have been dabbling and trying to figure out how to get into investing. Interested in commercial property, multi-family home properties as well. Listen to a lot of podcasts, and that's what now got me tonight. So also with the networking, learning as much as I can from people already currently invest.
Nice.
I'm Matt Palmador. I'm not currently an investor, but I'm interested to hear what you guys have to say.
Cool.
I'm Matt McAdams. I'm an investor by default because I buy houses and move to another one. Keep the other one, so I have some rentals. But I'm looking to learn more, primarily about long-term investment of land and opportunities of tiny houses.
Sat next to the right guy.
My name is Doug Rivas. I'm a territory manager for a manufacturing company. I just travel the country, learn from service companies, and kind of get the feel as to how the industry is doing. So I've been very interested with all the housing boom that's been going on, and I've been seeing Zach and Patrick sell life. So I'm pretty interested to see how I can do that as well.
Cool.
Whoever.
Hey, my name is Marlon. Not really an investor, but here to learn. Following a lot of people, self-educated, and just here to learn.
Yeah. Thanks for coming.
Welcome.
Nick Kovac. I'm not really an investor, interested in real estate.
You're all in the right place.
Hi, everybody. My name is Marlene Patton. I am currently a real estate investor. I have been property out in Georgia, and I really wanted to have more investors closer to home. And I live in New York, so definitely interested in talking about those. Anyone has any pocket deals that you want to
Also, we have chairs up here if you want to come up here.
Right.
Okay, you can come around that way.
Yeah. Great. You're done.
You can introduce yourself too if you want. Come on, stand up.
Okay.
You can come on.
My name is Melissa Case. I'm with Jacobs & Co. Real Estate. I'm an agent. This is my husband, Josh Case. Together we own Big Rock Construction. We're on the western side of the county, so we're Bristow, Noblesville, in that area. We've had some investments in the past, long-term rentals. We flipped the property in the past. We're getting ready to dive right in, get back into it. More so we need knowledge on the lending side of this. What's the best option? Right. Tim and I have had some conversations this week already. So. And then also just want to know if anybody wants to hop in on the journey with us.
I got a room full of people.
My name is Kathy Bauman. I'm a relatively new realtor with Exit Realty. I do have 3 rentals. I want to get more, and I need help finding those motivated sellers.
My name is Alawia Imam. I'm also new to the industry. I just got my license back in December. I haven't done single transaction, but I'm very interested in investing.
Great.
Welcome.
Great.
I'm Greg. I'm not currently invested, but I'd like to learn more about it, possibly some long-term retirement income through rentals.
My name is Jonathan. I'm not currently an investor. I have an agricultural background. My wife is unfortunately not here tonight. Her new job is actually potentially going to have us move from state to state. So this is really why I've always been fascinated with real estate. Just didn't know how to go about it the right way. So that's why I'm here, kind of as a proxy for her. But no, I'd love to learn about it and just get a little more.
I just saw that you had beer from out of But I'm Jason. I'm in the construction company business. And, my wife and I have a couple of pieces of property that we're hoping to flip and get into rentals. And I want to learn more about finding the loans. And those things. So you're learning. Thank you.
Nice.
I'm Christy, and I work in the office for the construction company, and we're just trying to learn and know more about investing. I'm Sheena Eflin, and we are currently we are not investors right now. We just want to learn about it. We're going to get a full story.
Not yet. Not yet.
And I'm Jenny Mirzayan. I am Patrick's wife, and I'm a loan officer. I work with Tim. I obviously help with the lending side of it, so I'm here to answer any questions you have as well.
She helps design our flips too. So there you go. Everyone knows each other now. We're not strangers.
Awesome, and just a little disclaimer, we are not financial advisors, lawyers, anything of that nature. This is for educational purposes only. We recommend talking to your financial advisors and or attorneys before going into any projects. Now I will kick it over to Tim and Nayia.
So tonight we want to talk about owner financing, subject to and lease options, right? Everyone's seen interest rates over the last 9 months or so has caused a lot of commotion in the market, and it made people realize they wish they had got in a different time or a different opportunity. And Naya's here to speak about all of the different options and the fact that you can capitalize on it no matter what the market is. She's been doing it for quite a long time. So what is owner
So let's talk
financing?
about what owner financing is. A couple of different things. Is if I'm the seller, okay, I'm the owner, and I have a loan. Let me give you a quick example. Our numbers, prices here in our area, if it's a $500,000 house, and I have a loan on it for $400,000, right? You can take over my loan as a rep, the $400,000. Now, let's say we negotiate terms for the 50K or 100, whatever we negotiate for the equity, then I'm seller financing that piece. There's a lot of houses in the U.S., about a third of the properties are paid off free and clear. Another way is if the seller becomes the bank, right? And what if you can negotiate terms where that bank is at a 0% interest rate? I have a property here in Woodbridge that I purchased 6 years ago, on seller financing at a 0% interest rate. In 4 years, this property will be paid off completely. We'll get into the example. And this one property is going to make me $700,000 because that's its value right now. So imagine, and I put 45K down. So we'll touch on that. But does that make sense about seller financing? Or the seller becomes a bank?
There's no danger of the bank calling in the loan?
We'll get into that too. Yes, there's a due on sell clause. So we'll touch.
And in this case, you said 1/3 of the country.
Guys, a lot of the properties are paid off. 1/3 of the country, people in their 60s, 70s are getting ready. They're retired. A lot of these properties are paid off. And these individuals may not need the money. So one of the biggest things is don't make assumptions. I tell everyone, don't make assumptions. If a seller has a lot of equity, you never know. I've bought houses for less than $5,000, only paying closing costs. And we're talking about $500,000 houses. So it's possible.
Yeah, question.
I have a question. How did you get 0% interest?
Good question. I didn't bring up the interest rate. So let's say I'm buying your house. This is the fair market value was like $450,000. So I said, if I bring 10% down, can you seller finance it for 10 years? I'll pay you $2,500 a month. And they said yes. So I'm making monthly payments to them, $2,500 a month. So in a year, it's a $30,000 principal balance reduction at a 0% interest rate.
How are you making it?
I have a tenant in the property for $3,385. So I'm cash flowing, okay, and I'm making the payment. So I'm making money on the back end and the front end. Does that make sense?
And how would you start a conversation like that?
You start the conversation by asking questions, and don't be afraid to ask questions. So when you're talking to a seller and they need or want to sell a house, say, I'm interested, can you give me some information? Is the property paid off? If you say yes, say, okay, great. Are you open to doing seller financing? Or are you open to doing terms?
So like, you're a real estate professional, so you get like a foot in the door. How does the rest of us find out about it?
There's a lot. So there's a lot of tools. So I'm doing a webinar in the next month, in a couple of weeks, where I use a tool. There's a real estate investor tools out there that I can show you how to market, okay, and what campaigns to target, what kind of sellers, so you can find your motivated sellers. Yeah, but let's keep going because I think
Sure.
we'll be stuck on the first couple of slides.
Sure. I was just going to point out, I think Matt Pobladar, we talked about this a couple of days ago. We're just having a conversation. He's not a realtor, and just having a conversation with someone.
It's a very good question, and there are tools out there. You could pull a list if you wanted to do it old school, and you could do direct mail and send sellers a letter. Say, hey, I'm interested in buying your house. And there's a lot of marketing campaigns. So if we're touching on that real quick, absentee owners means people that have a house but don't live there. So that's a very good campaign that you can focus on, right? So because you can assume that those individuals, you can even narrow it down even more. You could sellers between the ages of like 50 and 70 or 60 or above, and that way these individuals may be tired landlords and they'll want to sell their house. That's just one campaign.
I think you touched on some of this, but the pros for the buyers would be you could close quickly, obviously low closing costs, potentially low cash.
You're leveraging. You don't have to go to get a loan. So if you have a house and you have a job relocation next week or next month, I can say I can buy your house next week. How cool is that?
Then you do take ownership, right?
Correct. Correct. But the loan stays in place, remember. So if we're talking about houses that have existing loans, one of the things that needs to be communicated is that the loan does not get paid off when you buy a house subject to the existing loan.
Does it stay in their name or does it go in your name?
Good question. It stays in their name. I'm not doing VA loans allow assumptions. This is not a formal assumption. If you have a loan with Bank of America, I'm not going to call Bank of America, say, hey, can you approve me? Can you qualify me? No.
Yeah. So you're paying off doing them credit, essentially.
I'm paying off?
You're paying their loan payment, building them credit.
Not necessarily, I mean, their credit stays the same, but you can build someone's credit if it's a probate. That probate. If it's a pre-foreclosure. God, I had a long day. Pre-foreclosure, yeah.
But that is a pro for the seller, and another reason that depending on the seller's
that
situation,
could build their credit.
Yeah,
Mm-hmm.
yeah. Pros to the seller. Yep.
Yeah.
Same thing. Fast way to close. They can spread their tax liability out over years, depending on the terms.
So that means a seller, if the example that I gave you in the house here in Woodbridge, right? If this was a rental for them, so they don't have to pay capital gains the first year for the full amount. They pay taxes based on what they've received for that particular year. That's why it can get spread out, their tax liability.
And they can command a higher price. You were talking about the 90% rule.
They can. Yeah. So I'm willing to pay 100% of fair market value if I can get terms. If I can get good terms at a 0% interest rate, I'll pay you what you want. I'll pay you. If your house is worth $500,000, I'll pay you $500,000. If you can be the bank for me.
But little to no closing cost to the seller, no real estate commission.
I mean, they have to pay their grantor tax.
Yeah.
There's title company attorney fees, those title insurance, those fees.
Any questions?
How do you protect yourself from them selling it again?
Good question. I get the deed. They can't do that. They cannot turn around. They can't sell it to anyone else because it gets recorded in tax records.
They can sell a loan.
I'm sorry?
They can sell a loan.
The loan, yeah, the loan, but my promissory notes, it gives me the first right of refusal. So if they want to sell, they can come to me, because usually most people sell the loan at a lower number.
What would stop them from going into like a HELOC on it or something?
They can't, because they don't own it anymore.
So everything shows when they go to the banks, all the records show your name.
The deed, there's a deed transfer. Are you talking about if I buy someone's house subject to an existing loan and there's a loan in place?
A loan in their name. Could they essentially go out and pull equity?
They can, so this is the thing. Have I bought properties that have HELOCs? I have. But they signed disclosures and documents at closing. So my attorneys say that they can't go do that anymore. And from that day forward, it's not going to happen. Yeah. And you're dealing with individuals that you're solving their problem. Guys, this is a people business. Why would people are not in business to take advantage of other people? I haven't seen that. Yes, in real estate it happens, but a seller needs you to solve their problem.
Level of trust. So that they list your payments as income, and that's how they qualify for their next house.
Okay, so good question. How can they qualify for a new mortgage if they already have a loan, right? So what I do is, yes, one of the ways that I can bypass that is I can give them a corporate lease, or I show that I'm the one that makes the payments. So they go to their lender and say, hey, this property, I'm not paying with my income. So then Tim will qualify them for the new loan and won't count this property against their debt to income ratio.
Sure.
You see how you can avoid that?
Another question is, what if you miss a mortgage payment? Or what?
That's a good question. And people ask that all the time. Good objection. And my answer is, I'm not in business to go out of business. I will not miss a $2,000 mortgage payment and miss losing $30,000, $40,000, $50,000 on the back end, right? But to reassure you, I will deed the house back to you if that were to happen. Obviously, that wouldn't happen, right? But you want to reassure them because they're trusting you. Don't try to do this business if you don't follow your promises. Don't make promises you can't keep.
This is just an example.
So Rob, yeah.
Rob is one of the GRID, he owns GRID. This one of the examples that he did. I owner financed a property earlier this year that I owed free and clear. I received multiple offers. Some had traditional financing, and others wanted me to be the lender. I chose an offer that was 20% above the best traditional finance option. The buyer put down 20%, and I agreed to finance the balance for 5 years at 6% interest amortized over 3 years.
So this was an exit strategy. So if you're an investor and you own a property, you can seller finance it, and that's an example. And with seller financing, there's a lot of people out there who are business owners who may not qualify for a traditional loan, right? But they have the money from their business, they may not have the credit, and they could put down 20% or above fair market value because they really want to own their property. And you could charge a higher interest rate than a bank.
I had an attorney draft up a promissory note, and my title company handle everything else, and it was a simple.
So you can help sellers by solving their problems and buyers.
So you would say everything's about terms and helping people in your day-to-day.
My biggest, it's people. This is a people business. Yes. Your intention is to solve someone's problem. A lot of you are real estate agents here, and real estate agents have great customer service skills. Care about the individual first, and be genuine, educate them. And this could be a strategy that you have in your back pocket. What if you solve that seller's problem, okay, in 2 weeks versus 3, 4, 5, 6 months if you were to list the house? And by you buying it, you can make $50,000 on a property versus 15 on a commission.
How many people are actually doing that?
Not many. Yes?
So then my follow-up question would be, how do you finance it? So my husband and I have bounced around in the real estate investor area for quite a while.
Mm-hmm.
We started off on wholesale and came close to a couple of deals. My issue is, how do you find these deals that really get to gain? Not only help people, but also have a profitable business.
How do businesses get leads?
Marketing.
That's it. This is a marketing business. So how do you want to market? In the beginning, if you have no money, I would say start calling for sale by owners for free. I got my first subject to deal, my first creative deal 10 years ago in 2013 in Reston from a Craigslist ad.
awesome.
And I paid $4,500 to buy a property that was worth $375. I only paid closing costs. And it was on Golden Rain Court. What a cool sign the universe sent me, right? It's going to rain gold. And I felt like I won the lottery when that happened. Yeah, I was like, yes. So
How many loans do you have?
right now, okay, I sold a bunch of my portfolio. Like I'm at 20 right now.
Homes?
Yes.
How many
How
loans?
many loans?
Oh, none. Oh, loans. I have no loans. I haven't gotten a loan in my name since before 2010. Yeah. No loans. Why get a loan? If you can leverage someone else's loan.
The banks have to prove that.
Sorry?
When you take a subject.
Banks don't know.
They don't know. Okay.
No, the banks don't know. Do you think banks care who makes the mortgage payment?
No. I just was wondering if interest rates rising, if they would just not want to do it.
They don't know. Banks don't care. As long as they get paid every month, they don't care. They're not going to take a performing loan and put it in a non-performing category.
Right, but one of the things that you need to do is you need to get on your name on the hazard insurance policy.
Yes.
So that in case something happens in the house, old owner does not get a check cut to them.
I get my own policy. So as soon as I close on the property, I get my own homeowner's insurance policy.
But does the getting your insurance not trigger?
It might. So one of the ways that I do it is I put all my properties in a trust, in the land trust. And by putting it in the land trust, I could have you as my trustee, any of you could be my trustee. And many times I use the seller's last name, trust. So it looks like estate planning. So there's a federal law, we have an attorney here, but there's a federal law out there that if there's a deed transfer and it's for estate planning purposes, they can't trigger the due on sale clause.
That's a nugget.
Write that down.
So your webinar is going to talk about all this stuff?
Yes, my webinar, I'm going to talk about all this. I'm going to give examples of properties that I've gotten here in this area. Yeah.
This whole thing's recorded. We're going to send it out to everyone. We're going to send you the slides. You'll get a whole presentation.
Obviously.
Yeah, and the people who really want to get into it, in the webinar, I'll give more information. I'll show you the tool that I use for marketing purposes. There's so many things out there that, like another sidebar, I have a tool that uses AI data. And every house in the US has a score, like a credit score, just like we have credit scores. And they go up to 1,000. And higher the score, the higher the chances that that particular seller wants to sell that house in the next 90 days. How cool is that if you're an agent? You want to list it, or if you're an investor, purchase houses to target market, right? So, yeah.
So you've had a lot of success in this. How many deals haven't you gotten using this strategy?
Haven't I gotten? I'm a pretty good closer. Like I've gotten good at in the beginning. In the beginning, that wasn't the case. In the beginning, like I was nervous, and just like anyone, right? You don't know the objections. You don't know how to respond, and then you learn from your mistakes. This is how I buy all my properties that have loans on them. Now, and if I haven't gotten one, and instead of getting it subject to, I got it on a lease option, so I controlled it, and I can give you an example of that later. Yeah.
We have a Facebook question.
Yeah.
Will they get access to any of the contracts you use in your website? Be able to see any of the contracts?
On the webinar, I can show you screenshots of my contracts, but it's a free webinar, guys. I mean, holy cow! I'm like, I'll give you information. You know how much I've paid for education over the last 15 years? Over $150,000. So.
Thanks.
Yeah, I mean, I'll give you a lot of information, but I can't give you. Here's my land contract, my land,
Just on that note, right? That's part of what this group's about, right? So we've got one attorney in the group, and if there's anybody else that you want to bring to the group that can help each other and start growing trust and working together, that's what it's all about. I know we jumped ahead on some of this stuff. Besides like a foreclosure, pre-foreclosure, short sale, like the obvious reasons why someone would do this, can you tell some stories about like that we may have not thought about?
Why would a seller want to do that? Many reasons. So I've bought houses from real estate agents that haven't been able to sell their own house. Bought houses from people in the military that have transfers to other locations. That's job relocations, divorces, right? People with any life situation that needs or wants to sell a house, and you're solving their problem sooner rather than later. I bought a house from a CIA agent who paid me $65,000 to buy his house so he could move to Florida, and then I ended up moving in there with my family. It was on a golf course in a gated community. It was pretty nice. I bought a house from a former federal judge, and I structured it creatively. So, a lot. Scenarios. Don't make assumptions.
I think you got into this a little bit before about solving problems for the sellers. Let's skip some.
Yeah, we're on subject 2 now.
Well, the thing's broken. Sorry.
We didn't answer this.
Yeah, I mean she's.
I covered it.
Yeah,
So, yeah, no, we're good. Yeah, subject is like buying a house subject to an existing loan. That's what subject to is.
Yeah. Talked about this. So yeah, we're talking about solving problems.
Yeah, it's always about problems. You want to ask, why are you selling? Okay, what's your time frame? That's another good question. So some people may be just testing the market. Then motivation changes. Always remember, motivation changes with time. The longer a house stays on the market, the higher the motivation will be for them to sell. Okay, so if you call it for sale by owner on Zillow, and they just listed it a week ago, and they're getting all these calls from agents and investors, they might not be motivated right now. If that house is still on the market 30, 60 days from now, guess what? Motivation is a little higher.
Matt had brought up building their credit back. Yesterday I spoke to Melissa, and she called me about a client who was going to sell and then buy, and she wanted to time it right. And Melissa wants to buy the house and flip it. And of course I want the loan, but I told her, we're doing this tomorrow night. You should come, and maybe you could do it without any closing costs. So I guess that's another example.
For me, I'm trying to figure out how to pitch that to them.
So that's where a lot of investors mess up.
Right. I want to make sure I understand. I haven't even opened that
door.
Right.
And
I made an offer, verbal offer. She's like, I need the weekend to think about it, which is great. I want to be able to. I've built some trust. I don't want to scare her by saying, oh, by the way, there's this other option. I just want to make sure I fully understand what it's subject to is, because we are taking the equity from this purchase for her to purchase another place.
you're taking an equity from her own property?
Yeah.
How are you doing that?
Well, that's the thing. I can't do that if we're doing a subject to.
Okay. And unless you get a loan to pay her.
Right.
Or unless you're using a private lender or your own money to pay her equity.
Correct.
Okay. Or unless she wants terms. She gets a little bit and then you work out some kind of terms. We can talk. We can talk afterwards. I know make it seem very easy, and when I've been doing this for so long, yeah, it's gotten to the point where it's second nature to me. But in the beginning, what stops people from doing something? Fear and not knowing how, right? You know how many deals I lost in the beginning when I was first starting out as an agent because I didn't have the right documents, Like, I don't know what to do. And you don't want to look like a fool, one. And two is you don't want to do something that bites you, or doing something wrong, or making a promise that you can't keep too. Because integrity is super important.
We talked a little bit about this. Again, I think today's market, interest rates is definitely a big help for the buyer with the subject to, and the amortization schedule. That's huge.
Mm-hmm.
Anything you want to add there, or any questions?
So when you're buying a property subject to an existing loan, what are the ways that you can make money? Obviously, when you buy, you want to make sure you buy usually below market, right? So you have a profit margin in there built in when you purchase property. Appreciation, right? And two is every time you make a monthly payment for that mortgage, or your tenant makes a payment to that mortgage, you're getting principal balance reduction on the back end. And so many houses have such low interest rates, 3-4%. I just bought 2 houses like a week and a half ago in Texas. There are like 2.75, one of them, and the other one is 3%. I'm getting $1,500 a month on principal balance reduction on one loan, and like $1,000 on the other loan.
Plus cash flow.
Plus the cash flow from renting it out. How cool is that? This is how you build wealth. And real estate, to me, is the best vehicle to build wealth. And it's about working smart. And this strategy, okay, is a strategy that allows you to work smart and not hard. And solve problems.
We touched on this a little bit. I don't know if there was anything you wanted to add.
Risks.
About the land trust.
Can the lender, first of all, let's say your houses that you own now, if you want to put them in an LLC, did you violate the due on sale clause if you do that? Yeah. Is the lender, how likely is it that the lender is going to call the loan due? Not likely, as long as they're getting paid. So there's no risk.
Have you ever seen it called?
I have not. I had one loan on a property in Stafford because it was a very small bank, and they made us like do something to the deed. So I and then the insurance policy. On the insurance policy, we added the previous seller as additional insured. But
it sounds like if they call it,
they did not call it.
It can be worked out.
First of all, they're not going to call. Again, I work with underwriters. They're not going to take a performing loan and put it in a non-performing category. But let's say they start. Let's say worst case scenario. I haven't seen it, guys, and I've done a ton of deals. If they call the loan due, chances are they'll give you a timeline. What, 60, 90 days? Based on the foreclosure statute in that state. So what are your options? Could you refinance it, pay them off and be done? Yes. You could get a private lender, hard money lender. You could even sell it in that time frame.
Yeah, but there are insurance companies now that will insure that.
I get you mean title insurance?
They're subject to insurance companies that you'll pay them a premium. And if there is a due on sale clause by the bank, that the insurance company will pay it off.
Guys, that's a smart insurance company. Whoever came up with that, holy cow. Wow. If I'm the insurance company, like, oh, holy cow. Would I get it? Will I get it insured? No. No. So please don't go to that insurance company.
And I'll give you my thoughts on like self-insuring yourself, right? Are you buying deals that don't make sense?
Never.
Yeah. And
never.
And we're going to talk about all kinds of investing topics and strategies, and don't over leverage yourself. make sure you have reserves, make sure you buy assets that cash flow. And
listen, in this area, I bought houses that didn't cash flow, that I was negative a couple $100, but because I was getting $1,200, $1,500 on principal balance reduction, I made up for it on the back end. And because I bought it below market, like if I got it at 85 cents on the dollar, right? Or 90 cents on the dollar. And if I'm negative $200-300 a month, I didn't care,
sure.
Right? Sure. Because I was making up for it. I had my profit margin and the principal balance reduction and appreciation in 2, 3, 4, 5 years. So I have the prices here in our market, the mortgage payments compared to the fair market rents may not be equal sometimes.
That's a question for me. Like, how many, if any, houses have you bought recently here where it's made sense, where it's not, you're not under? Because the value
Quite a few. I just bought one in Sterling a couple months ago, and the seller paid me $32,000 to buy the house, and I'm renovating it because the numbers were a little upside down, and they were moving to Pittsburgh or Pennsylvania, another state, so they paid me to buy their house. I'm in the middle of a renovation right now. I'll put it on the market in a couple of weeks. I bought houses in Stafford, Fredericksburg. Our rental market has increased. So a lot of our prices, and I cover myself. It's been years since I haven't been able to cover my mortgage.
Talked about the trust.
I'll read it. The seller wanted $50K cash quickly. He wanted me to assume the payments. My plan was to renovate the house and list it 2 months later. So instead of having to get hard money to close the deal, I used his underlying debt, which had a low interest rate and was 10 years to amortization. Explain that one.
Yeah, I'll explain this one. So this is Rob's deal, like he did like a year or 2 ago. So there was equity, and Rob knew an investor. The investor brought him the deal. The investor needed $50K up front. So this is what Rob did. Instead of getting a hard money lender, let's easy numbers. Let's say this house was $300,000, right? Or it was $400,000 or $500,000, and it had a $300,000 loan. So there was equity of $50K that the seller needed up front. But based on the numbers, okay, for the renovation costs, for Rob to make his profit margins, he decided to take over the existing loan instead of using a hard money lender for the $350,000, for $300,000 loan and the $50K. So he brought $50K instead of $350,000. Does that make sense? So by doing it this way, you avoid using hard money lenders. I know we have a hard money lender here. And if you have no other option, especially for a flip, you use a hard money lender. But if you can leverage a loan, it's so much cheaper, right? So you save money. So I use private lenders. I haven't used a hard money lender in over 10 years. The other pros and cons, most hard money lenders want you to sign a personal guarantee. I was not comfortable signing personal guarantees because I was around in the crash 2009, and I was scared to death that I would lose a couple of my other properties that I had. So I have seen a lot of I've seen investors go bankrupt because they over leverage, and then the hard money lender has no other option than to go after them personally, and that they had to file bankruptcies. They're out of the business completely.
So we did a deal earlier, 2022. Owner died, son got the property. Son didn't want the property and wanted $50,000. And he was, I just want $50,000. We were like, well, the home, the
loan.
So it was a reverse mortgage.
Oh, you got a reverse mortgage?
So we basically told him the home is only worth $275-ish right now. But if you keep the loan, we'll pay for all the renovations, we'll list it, we'll sell it, we'll pay you $290 after we list it and sell it. You just keep everything in your name. He said, okay. So we did the renovation, which we borrowed the money from an investor, paid for the renovation, listed it and sold it for $360. Paid him his $290, paid the investor back his $20,000, and then we kept it.
So my question is, what kind of documentation did you have to protect yourself?
Frankie wrote the documentation.
You had a what?
Sorry, no.
Like a joint venture agreement, like hybrid renovation. Similar, renovation.
A what? A renovation?
Novation.
Oh, novation.
They call it a renovation agreement, but it's kind of like it's more like a joint venture. It's like we're joining together where I have laid out all the terms of the whole transaction.
So did you do anything to cloud title?
Not to cloud title, but there was notes. We had notes drafted for, actually no, between you and the seller.
Did you have things?
No, nothing to cloud title actually.
So if the seller wanted to go to another investor, another title to do something, he could have done it.
I mean, ultimately, it's all goes down to court anyway. So if we went to court, our agreement was like first instead, you know. But
There's
yeah.
also someone we knew.
Yes. Okay.
We knew him, and he came to us.
So, and this is the other thing. This was very short term, like a couple of months, right? So I wouldn't, if you were to do this again, like
We did it again, one street over.
with another reverse mortgage.
No, this was paid off.
Okay.
The seller came to us, again, someone we knew, exact same house, exact same layout. We did the exact same renovations. Turn around, same thing, paid them what they wanted, and we.
Okay, that works. That works. Okay, touch on reverse mortgages. Don't do them.
Yeah, don't do them.
Don't do them. It's bad.
I was old at that.
And this is the other thing. Reverse mortgages have a clause on them. If the seller dies, you only have a year to pay them off. All right. And this is the other thing. What's a reverse mortgage, guys? Is the loan getting lower or higher?
We have to renovate fast.
You're thinking, oh, this has so much profit. And in a year, you hold the property. It's like, oh, there goes my profit. Yeah, you don't want to do reverse mortgages.
On the property we didn't know.
Oh, so you had some surprises.
Oh yeah.
Yeah.
Lucky they were minimal, but.
Yeah, and that would be my advice would be don't mess with a reverse mortgage.
Yeah, don't mess with a reverse mortgage.
It was more stress than I would have liked to have.
Yeah.
But that was our somewhat subject too.
Okay.
It wasn't pretty, but we got it.
You made money.
At least you made money. At least, and you solved the seller's problem, and they were happy.
Yeah. And then the other house.
You win.
One street over.
Perfect.
We had our signs up in the neighborhood, and we were trying to market.
That's perfect. This is the other thing. You guys can market if you have a property in the neighborhood. Okay, knock on the doors. Like I bought a house last year in Stafford, and I went to check on my contractor, and then the next door neighbor came out, and we started talking. Within a few weeks, he was like, "Oh, I'm thinking about selling. Maybe in a year or two, I'll move out." 2-3 weeks later, I spoke to him. I had their house under contract, so that 2-3 year plan turned into like, oh, I can sell sooner rather than later. So I have bought 2 houses right next to each other, and I have a neighborhood in Old Town Manassas, very small townhouse community that I bought like 8 to 10 throughout the years.
Oh, wow.
Just because I would tell the property manager, I'm like, hey, if you know of any seller that wants to sell, I'll give you $1,000 referral fee. So word of mouth is another good way to find these deals. Start telling everybody you know that you're helping, you're in real estate and you're looking for people that need or want to sell a house. And if they have a situation that they're going through, tell your friend to let you know. And you can give them a referral fee. Whether it's $500 or $1,000, it's up to you. You think people are going to want to refer your business? Huh?
Once they collect that first one,
they're like, oh, yeah, you did pay me. Make sure that you only give the $500 or $1,000 referral fee if you buy the house. You have that on the card. Everybody will be giving you referrals nonstop.
So drafted the paperwork, reported my interest. 3 months later, I sold the house, paid off underlying debt, and pocketed $50,000. Most subject to deals are held for longer periods of time, in many instances for years, but this example gives you an idea of what is possible.
So the deal that I'm doing now in Sterling, you want to think about taxes. People who are rehabbing houses in less than a year, 6 months or less, they're at a higher tax bracket, ordinary taxes, right? 35-40% based on your tax bracket. But if you're a long-term investor, you're holding properties longer than a year, 2-3 years, then you're paying capital gains. It's more, you see the difference? And that could be half. Now, when I do my flips, because I don't like paying too much taxes, I like using my self-directed IRA. So the one that I am doing in Sterling right now, because it's going to be $100,000 profit, I want that $100,000 to go back in my self-directed IRA tax-free. How cool is that? Learn how to leverage.
Everyone familiar with what that means?
Do you know what a self-directed IRA?
I know I have a separate IRA.
No, so just like you have retirement plans, right, 401ks, you can open a self-directed IRA that allows you, and I have companies if you want like contacts, that you can open an IRA that you can put money in it and then you can invest it in any way you want. There's certain IRS regulations and rules that you have to abide. Like you can't move in this property yourself. It has to be an investment. You can't loan money to your family member or your brother. You can't do that. Your child, your husband, your wife, you cannot do that.
Is that only for real estate deals?
Regarding real estate, yes. Or the investment, you can invest in businesses. You can invest in anything you want, right?
There's no cap on it?
What do you mean? There is, based on depending on the type of retirement account you open. Whether it's traditional, Roth IRA, things like that.
You're saying, is there a cap on
Yeah,
like
for
the
example,
size of the investment?
I have a business, so I have my own set plan, self-employed pension.
Mm-hmm.
But there's a cap of 50, well, I think it's 61,000.
A year?
Yeah, 25% or 61,000.
So I don't really know the exact numbers.
I mean,
It's the same as a regular IRA. It's just you're directing the assets.
Yeah.
Yeah, you're directing the asset.
It's exactly the same as a regular IRA, except you get to pick and choose where your money gets invested. But like if you open up your SEP IRA, is probably held by a company that lets you put money in the mutual funds that they have control of, the Vanguard or something. Yeah, they're going to tell you you can't do a self-directed IRA. You have to go through different
Vehicle, like a different company, like a middleman. So I had a normal retirement account years ago, and I just rolled it over into a self-directed IRA, and then I multiplied my money, like 25K. I just turned it into, a couple $100,000 throughout the years, and I stopped putting money into it. I just let it do its thing.
I don't do nearly as much real estate investing as Nayia does, but I've got a lot of experience with different types of real estate investing through self-directed. So with me, back to your caps, like what Ryan was saying, the caps are just, SEP IRA or traditional IRA, and then you transfer the money over. And then in my case, when I'm not investing it, I transfer back to the regular IRA.
Oh, you do back and forth, but you're
Yeah.
paying fees, whatever.
Sure.
Every time you roll it over.
Correct, but if I don't have, I do different types. Like I do note investing, where I invest in projects, mainly real estate investing. I mean, real estate related. But then I also own properties where I collect rent, and the rent goes directly into the IRA. I've got another one that I'm doing a flip right now.
Okay, good. Yeah.
If you have a current IRA, I believe you can move the money laterally to a self-directed IRA with little to no penalty.
Correct.
Correct.
Yeah.
No penalty.
No
As long as you
penalty.
follow the rules, no penalties.
Yeah.
Yep.
Usually an annual fee though that you pay to the custodian for
Correct.
having that.
There's an annual fee. Minimal, couple $100, based on the size of your IRA account.
Kind of off topic, but when you do a subject to flip, does that avoid the FHA? You know, if you buy a house, you renovate it, you can't sell it within 60 or 90 days.
Yeah, I've never had that.
So if you do a subject to flip, that doesn't really count as.
I have not had that happen.
Well, the title's transferred, right?
The title's transferred.
It does.
Yeah.
Day 91, you have to write the contract.
Okay, so you
Even on a subject to, because the title's transferred, so it will go under the FHA guidelines.
Yeah.
Day 91, you gotta write the contract and close it after that. The contract cannot be written before day 90.
The contract cannot be written. I think I had it happen once or twice.
FHA?
Mm-hmm. The new loan might have been an FHA. And I was surprised. I was like, whoa. Like on 70 days or something like that.
At least you weren't a lender being surprised about it. That's fine. So how long do you typically, I think you talked about this a little bit, what is your strategy on most in terms of the time that you keep a property?
It just depends. I always like to have more than one exit strategy, right? If I buy a property that we negotiate, owe you, let's say 30, 40, 50, $100,000, okay? Usually the term that I do with a seller is 60 months, 5 years. So that means I have to either pay that note off sooner, right? Do either a lease with an option to buy, to an exit. I like to hold the properties 2 years or so, 2 to 3 years, minimum. Because the cool thing is that you're getting principal balance reduction, you're getting appreciation, right? You could get a deposit from a tenant buyer. We'll talk about lease options later. A property could easily be $70,000 to $100,000 in equity. Now, I want to take that one property and buy 3, 4 other 5 properties. I want to leverage it more. So turn that $100K into $300,000, $400,000. So that's why I do it. So now my strategy is focusing more on the wealth building side. I want to be holding on to a lot of my properties longer, just like the one in Woodbridge that's going to be paid off in 4 years.
One more question. Yes, with the IRA, you wouldn't be able to capitalize any of the cash flow.
On the question, what is it saying? The IRA?
Self-directed IRA, you wouldn't be able to utilize any of the cash flow because it's going back.
No, it has to go back to the IRA. You can't touch the money unless you're going to get penalized.
It's the same way you wouldn't in your 401k. There you go.
What is a lease option? I guess, which story did I give you yesterday? So there's a couple of differences. Do you want to control a property with a lease and an option to buy? Okay, it's always preferably to own. There are benefits in owning, right, versus controlling, because you have tax benefits, you get principal balance reduction. So always go to buy a property subject to. Now, for some reason, if the seller is not comfortable with leaving the loan in its place and giving you ownership, then you can control the property by doing a lease and an option to buy at an agreeable option price. So I'm going to give you an example of a property that I did. My lease agreement with the seller was whatever their mortgage payment was. I had already done my homework. I knew that fair market rent was higher, so I could be cash flowing $300 to $400 already. Now, The seller was not comfortable in me buying the house subject to. So, but we agreed on a price. They knew what they would get if they sold with an agent. So we got it. I got it at 90% of the fair market value. So that was my option price. So the negotiation that I had with them is I said that I would start making payments to them in 60 days, in 2 months. And I did a 5-year lease and with an option to buy. So that means I locked in that price for 5 years. So what did I do? I started marketing the property. Okay. I found a tenant. Okay. I found a tenant who wanted to buy that. He had just gone through a divorce, and he wanted to buy the property, but his credit wasn't in its best position for him to qualify for a loan. So I put him in touch with a mortgage lender, and he brought $15,000 down. My option price with him was 10% above what it was with the seller, like $30,000 to $40,000 higher. And I had only given her $1,000 option consideration. So within 60 days, I got $15,000 from him. He ended up purchasing the property 18 months later. Now, one of the things that you need to be careful with is when you are controlling a property with a lease and an option to buy, you want to make sure that you have the deed in escrow. So if something happens to that seller and they die or something happens, you want to always make sure that as long as you can perform based on the terms of your agreements, you can get ownership or you can get your money, things can go through. Does that make sense?
So you take the lease option and like record it?
You could put, I put a memorandum.
Okay.
So I cloud title too. So that's how you can control. Now, it's always better to own, right? Now, many times I don't like dealing with tenants and toilets. So a lot of my exit strategies is doing a lease with an option when I sell, right? Make sure to always use 2 different agreements, guys. There are some agreements out there that are mixed. You don't want a lease and an option agreement combined. You want 2 separate agreements, a lease agreement and an option agreement. Because if that tenant stops paying you rent, you can evict them. You don't want to confuse the judge. Those are the stories I was talking about. Confuse the judge, with it too. You're going there for a reason because they defaulted on the lease agreement, and that way they feel like it's their property. And my option agreements say that anything under $1,000 of repairs or maintenance, it's on them. Now, if it's an HVAC unit or if it's a roof issue, I'll cover it, right? But I don't deal with toilets and that's minor issues. So, and this is the other cool thing. You can ask anywhere from 3 to 5% as a down payment of the sales price. You can ask $10,000, $15,000, $20,000 as an option consideration. And guess what? If they choose not to buy the house, what happens to that option consideration? It's non-refundable. You keep it. And you can do it again. Like a sandwich lease option? So it's going to get a little confusing.
I think we're already there.
Yeah, you think you're already there? There's a sandwich lease option. You control the property the same way, right, with a lease and an option to buy. And you find another tenant, lease and an option to buy. But instead of so what I did was a sandwich lease option. I stayed in the deal for 18 months. until that tenant was able to qualify for a loan and purchase it, right? I was a sandwich. So I had the seller lease option and the buyer lease option, different prices. I made the profit and the differences. I was cash flowing from the rent, and I made the profit from my agreed price with the seller to my agreed sales price with the tenant. Does that make sense? Now, if I chose to put these two parties involved and step out of the deal, that's another way you could do that. And I could have gotten paid, whatever amount, and just put these two parties involved. And if they perform great, if not, it's not my issue. I'm out.
That would be kind of like wholesaling at that point.
That would be.
Okay.
But I made more money by sticking
Sure.
in the deal, being the sandwich.
So the pros for a buyer working towards buying a home, right? So we've all been there in our life, but you're using it to make money as well, right? Help people become homeowners and make money.
Yeah, you can, absolutely. It's a win-win.
And the pros for the seller, you can pass on maintenance issues, which you talked about with your $1,000 rule, lock in great price and terms.
And then the price that you lock in is a future price. So if I give you a lease option for 18 months, okay, or 24 months, whatever we agree on, it's going to be at 105% of today's fair market value. I'm not going to lock in the price today's fair market value. And people are happy to do that. They know. They understand.
What happens if the price?
If the prices not go appreciate like crazy, my option agreement has a clause that says that I have a right to do like an appraisal, and based on what the appraisal comes back at, then that price would be negotiated. That price would increase. The option price would have to increase. Now, I have had some tenants who have pushed back, and a couple of times I've removed that clause. So I have a property right now, in fact, that I removed that clause, and I wanted them to exercise their option. They would have made like 100K. I would have made a ton of money too, but based on the prices like the last couple of years, they would have made 100K themselves by buying it at my price, or if they sold it or did something. And idiots won't do it. And I'm like, are you serious? So now that I'm extending the lease, they don't have an option anymore. That defaulted, they lost the money. But I'm like, what's going to happen to the market? So this is a property I've had for 4 or 5 years. I'm going to keep it long term. It's in a 55+ community in Gainesville, in a gated community on a golf course. I'm thinking it could be my mother's property. My mom would be moving in when she moves from Richmond.
Do you charge more rent, or do you do some sort of money that they paid for?
Yes. So this is another thing that you could do, a cool strategy when you're doing lease options. You could give them rent credit. So if fair market rent in the area is, let's say, $2,500, and then you say, can you pay $2,800, and I will, and the owner, not you, the owner will match it, okay, as a rent credit. So when you're ready to buy the property, you can reduce the locked in price by that amount. So for example, you're getting $2,800 a month, right? So you're getting above fair market rent. You're cash flowing. Now, they do exercise the option. So all you do is the $300 that you were giving them, you reduce the price, the option consideration, by $3,600. You see the difference? You see? Well, actually, including their $3,600, so it's $6,600 total. If they don't exercise, then that extra is yours. Everybody's quiet. Like, are your wheels spinning, or did I lose you somewhere?
Yeah, I was going to ask about the contracts you were
Yes,
talking
yeah,
about.
always
but-
do
yeah.
use two.
Yeah.
In this scenario, so I had to evict a couple people, Prince William County, and they had lease option. Lease with an option to buy. So one of the properties I brought to the judge, like they were behind like 3 or 4 months. So I gave the lease agreement to the judge, threw the case out. Yep, I got a judgment against them, so I collected the amount. The same judge, like 6 or 8 months later, ruled differently. The tenant brought the option agreement too, and then the judge is like, oh, they already paid this money. So the judge reduced the money that they owed to me, but what they had given me as an option. And I was like, he ruled differently. I was so upset. I was like, I guess he wasn't having a good day today. At the end of the day, you know, I still got my property back. Virginia is a pro-landlord state. So that's a good thing. You can evict quickly. Other states, not so much, including DC and Maryland.
When you're doing you were talking about renting the house and then renting it out again with the options contracts, are you using the same contracts everyone else is using, or you're creating your own? Or?
No, I have my own contract.
Yeah.
Oh, this is the other thing. You're using a different contract to control my agreement. It's different, lease agreement, a different option agreement when you're trying to get it from a seller, and very, very different when you're trying to get a tenant. Not the same lease agreement, option agreement. This side, when you're dealing with sellers, simple one-page agreements. Like, yeah, these are the terms. This side, you put in clauses to protect yourself if they have evictions, things like that, like 6-page agreements on this side. You want to control a property, and you want to do it the easiest, more simple way possible, and you want the seller to go along with it. My purchase and sales agreements, when I buy property subject to the existing loan, I have two different agreements. 2-page or 1-pager that's legal. Very simple to the point. They're not like the real estate agent agreements that are like 12, 13, 14 pages. And the reason they are that long is because they have to protect the broker. There's a lot of clauses in there that don't apply.
Do you have attorneys that know how to do it, what you're doing? Or?
I do, and I had to train one of my attorneys. So this is the cool thing. Don't think that every attorney knows how to do this. A lot of them don't. So, yeah. Or some of them might say, is this legal? It sounds kind of illegal. Like,
Talked about that. Running credit and checking landlord references.
When you're trying to get a tenant.
So you're collecting deposits as much as 2 to 3 months?
You can, or if you want to use a percentage.
Yeah.
So when you're doing the lease option to buy to somebody, you're also collecting your deposit on, just like you're renting that to them.
Correct,
so
correct.
Like you said, option separate, you're still.
I've done that. Yes and no. So some instances I have a security deposit, but most of the time I don't collect a security deposit because I have the option consideration.
Yeah, but like for instance, for that judge ruled against your option, you had the security deposit also. That would help you.
Correct. I didn't, not for that property. Yeah.
There's just all the ways to help you, I guess, with a throughout the duration and then an exit strategy?
Yes. So these are just, you don't want to, you're coming in this room and learning from people like myself, like everybody here. You don't want to reinvent the wheel or make mistakes. When I was first starting out back in 2003, 2004, I didn't know these type of groups existed. Okay. And you know how many times like I was feeling like I need to get out of this business because I was buying low income properties and I had bed tenants and I didn't know how to qualify them. Okay. And they would disappear on me. They wouldn't pay rent. And funny story that is I learned how to fill out paperwork because I'm not, I had a Fairfax County police officer that disappeared on me. I filled out the paperwork by myself because I didn't want to pay attorneys. I didn't have a lot of money back then. I had like little kids. So I garnished wages from a police officer. And first of all, I love police officers. But one of my friends here in Prince William County was a detective. And he's like, why don't you contact Internal Affairs in Fairfax County? And I was like, Internal Affairs. I was kind of scared. So I did. I contacted Internal Affairs, told them what was going on. Within a week or two later, they came back and they said, unfortunately, this is a civil matter. There's nothing we can do. He does agree that he owes you this money. So then I was like, can you give me his address? Because I wanted to have Prince William County, the sheriff, serve him. So I know where, you know. They're like, unfortunately, we can't do that. But guess what? I got the Fairfax County Police Station. So they served him at the police station. So I ended up garnishing wages. In 6 months, I got my money back. So that's a cool lesson, a cool story to learn, right?
I think with this, the whole thing is saying have the numbers ready. You're there to basically, you want your tenant to buy it.
You do. That's why I put him in touch with someone who can qualify.
I mean, so 30% of people don't execute.
Yes, like about 30%. For me, only 30% execute. Yeah, most do not. So yeah, my experience has showed like 34% actually close. A lot of people, things change. They don't want to buy the house anymore, or a year later, or they get a job relocation or something happens, so they do not exercise the option. So that money is non-refundable.
Tenant buyer can close in time, extensions, cost, additional deposit, and possible negotiation of purchase price and monthly rent. Defaults or change minds, you can keep deposits, re-rent, and begin the process again. Or if it does eventually qualify as an option, you will lose your rental, so price accordingly. So you can, just because the lease option ends, doesn't mean it's.
No, you want to work with an individual.
You can
yeah, you can extend it. And you can say, okay, well now guess what? You have to make another option consideration of price because we're gonna lock in the future price at a higher price because you can't buy it this year, and prices are going up. So you make that change, and you can do the same thing with a lease. You increase the lease by 5%.
And if they're a good tenant, then you're going to continue to build wealth and pay on that amortization schedule.
You can, and sometimes I've helped people out because of their situations where I have not increased, like the monthly lease. The cool thing is it's a people business again, and if someone has kids or they're going through a hard time, it's up to you how you want to help them. And I'm someone that I want to help you buy the house, and I wouldn't be an obstacle. And I'm not going to do an option consideration at an unreasonable price. Like, for example, it won't be overpriced. I'll make sure that the house appraises at that amount. Does that make sense?
I know it's 8 o'clock. We're almost done.
Okay.
And then everyone's welcome to hang out as long as they want, but I want to be respectful of everyone's time.
So basically, when you take away from the discussion that there is a number of options available to the buyers and sellers that are often overlooked. The more familiar you are with these concepts, the more valuable you become.
Any more questions? Guys, sign up. So on yeah, cool. Because I'll go into it even more with marketing. I'll go into show you deals. I'll show you closing information. Like if this is something that is it of interest to you, and it should be, because when I first found out about it, I was like, I won the lottery. No one is doing this. Oh my gosh.
I can tell you as a lender and someone who makes money on loans and someone who's very busy like all of you, this is the one topic that excites me the most, especially in this time.
Yeah, it's the one topic that has been exciting me for 10 years.
Yeah.
Rates are increasing.
So if you can get a loan from someone at 2 or 3%.
And not only that, as the market shifts, which it always does, right? People are losing jobs. Like my husband at the time, over 13 years ago, we lost our house. We were going to have it foreclosed on, but because I was an agent at the time, I decided to short sell it because he had gotten laid off. Okay, so a lot of you who has been through a hardship, like a financial hardship, the last 10, 15 years. I know I have. A couple of people here have too. Yeah, so it's a normal cycle. It will happen. It may not happen to you again. I guarantee you it's not going to happen to you. But it's going to happen to so many other people that you can help, right? And if you have a strategy like this, if someone loses a job, right? What if you can help them from losing their house to foreclosure or not being able to buy another house for 7 years, right? You help them move on with their life.
Pre-foreclosure is something you can look up. Look up over pre-foreclosure. You can go to the sellers and figure out a way to help them pay off whatever they owe. Take control of their house.
Yeah, you can negotiate. So you could buy lists. There's a lot of different ways to go about that. Just make sure that when you're marketing to pre-foreclosures, there's a couple of strategies to make sure that there's equity in there, first of all. So you can reinstate the loan. That means make it current, and then you can take it over, right? If they're behind, let's say $10,000, $15,000, or $20,000, and I've seen people behind like $70,000 the last couple of years because of COVID, and they still had some equity, I was willing to reinstate that loan because there was another $150,000. Okay. Now, if there's a first and a second, this is another cool strategy, okay, which I didn't talk about yesterday. If there's a first and a second, guess what? You can reinstate the first, and we touched on it, and the second, you can short sell the second. So if it's like a $70,000 or an $80,000 loan, what if you could wipe it out completely by paying 5%, 10%, 15%? So you just created automatic equity by wiping out one of the loans. Does that make sense?
Basically, the second loan is sold to a debt collector, right?
So the second lien, you short sell the second lien. So, and you reinstate the first.
Isn't that whoever's loan it is, their credit? So if you're buying from somebody, you're short selling their loan.
Correct. So they'll know. You're short selling one of them. So they'll know because in many cases they're over leveraged on the first, on both of them together. Okay, they're over leveraged. So you, as an expert, because from this point forward, consider yourselves a professional, real estate professional. Guys, I'm telling you, you have to act as if, and you have to believe it. In life, we get what we expect and what we believe. If you believe that you are someone who is trustworthy, which everybody should be like, yes, okay? If you believe that there are people out there who need help, there are, okay? If you believe that you can find a deal like this, then you will. I knew the first time I learned about this, I was so excited. I was like, are you serious? I know a deal is around the corner for me. And it was within 3 weeks.
What has been your best method in engaging those who are in pre-foreclosure?
So you could do direct mail, okay? And people in pre-foreclosure, they're going through a motivation phase. In the beginning, it's a denial phase. Oh, no, I'm not going to lose it. I'm not going to lose it. I'm not going to lose it. Once they get an auction date set, oh shit, I'm going to lose my house. And I have 2 weeks. They're scared that people are going to come in and take all their stuff out. So you knowing that, you know, because it's public information, you know when the auction date is. So start beforehand and start sending them like weekly letters. If you want to use a strategy that most people don't do is, do you want to go door knocking? First of all, you could try it. Have a female with you. Chances maybe they're less threatening, right? Because it's human nature. Like, obviously, another thing is know your posture, like how you behave, how you interact. Okay, these are things that you learn in time. The more you're in the business, you learn certain techniques, certain things with people. So I just gave you a couple nuggets that hopefully are helpful.